Hi, Parsi. We're here today to talk about how our underestimating our raw materials impacts our financial statements. I apologize for not sharing a video of myself. I am recovering from COVID, so today's presentation will be virtual only. We're going to start by talking about the background and introduction. So the material costs forecast for Q1 were off, as I mentioned before. That impacted the cost of goods sold by $350,000, which thus impacts our forecasted net income. And that was due to underestimating the amount of polyurethane foam used to manufacture each refrigerator. Talk about the inventory transactions, how they're related to the cost of goods sold. So we know polyurethane foam is a raw material. We know that we use it for manufacturing our refrigerators. And on our financial statements, it's considered inventory. So we report inventory on our balance sheet as a current asset. Once it's sold, it's reported on the income statement as cost of goods sold. And this line item is the company's largest expense. Cost of goods sold is the expense incurred by making the goods or refrigerators. So what input costs do we have in order to manufacture the refrigerators? Our profit is calculated by subtracting that cost of goods sold from revenue. The higher the cost, the lower the company's profit will be, and hence we'll have less cash to expand, pay for wages, rents, etc. Let's take a look at the original journal entry. So we added a journal entry on March 15th for raw inventory. Originally was estimated for $500,000, so we debited our inventory account and we credited our accounts payable. And I have a line item note here, and that was to purchase the 11.22 pounds of the polyurethane per refrigerator. And we added the $500,000, we debited the $500,000 in our T accounts in our inventory account. Let's talk about how we adjusted that journal entry and the T accounts in just a moment here. So we adjusted our journal entry to show an incurred income or expense, and this in this case is due to off estimates of how much material was needed. So here we debited an additional $350,000. We debited our raw material inventory, and then we credited our accounts payable by $350,000. And I have a line item note here that that's for the purchase of the additional polyurethane underestimated for Q1. Let's take a look at the T account. So we've got inventory here debiting $350,000. We've got our income statement debited by $350,000. We've got our accounts payable because we've got to pay the polyurethane supplier additional $350,000. And we're also crediting our income statement by $350,000. Finally, let's talk about our lessons learned. So in order to avoid this going forward, we should use data where we can. So working with us, the finance team, to review your previous quarter material estimates before determining the needs for future quarters. So let's take a look at what we use this quarter to determine, and let's make the adjustments today for our forecast for Q3. We keep this information documented in our journal, so we have all of that data. And let's make sure we leverage that. We can measure how many refrigerators were manufactured along with the pounds of polyurethane used to calculate the accurate need for the materials for the remaining quarters. And we can also establish an efficiency control checklist to minimize waste of the raw materials. Okay, that concludes the presentation. Thank you for your time.